Hey everybody, it's the team from Financial Market Wizards. Now, if you are looking to master Forex trading and improve your trading results, then you're in the right channel. Because in today's video, I'm going to review some of the most common pullback trading mistakes that beginner traders make. Now, understand that many of you lost money trading pullbacks, and perhaps you're still thinking whether pullback trading actually works. But don't worry, because today I'm going to share with you some of the mistakes that you may or may not be making, and hopefully that will help increase your win rate and help improve your trading results. Okay, so let's get into today's video. Now, trading mistake number one, only identifying one support and resistance level. Okay, so a lot of new traders, they only identify a single level that they wish to trade. Okay, so over here, I've put out the chart for you. Okay, we are looking at Kiwi franc. Okay, so in this case, this is the perfect example of how a beginner trader trades. Okay, you identify a zone of support slash resistance. Okay, and you hope that price retraces to the level, and at that level you buy it up. Okay, so in this case, this is your textbook example, and you probably would have caught a very nice movement if you traded like this. However, the market doesn't always happen like that. Okay, consider the following scenario, which is also a pretty common scenario. Okay, you as a new trader, you identified the resistance at this level, and you're just waiting for a breakout and a pullback back into resistance turn support. Except that the market doesn't actually pull back to that level. Okay, so what do? Do you just miss out on the trade? Right? So that is why you don't just want to identify a single support and resistance level, because if you do that, you might have missed out on very good trading opportunities, especially if price misses your level by a couple of pips. Okay, so you do not want to just look at one support and resistance level. You want to identify multiple support and resistance level. Okay, not to worry, I'll go into greater detail about how to solve these mistakes, because I don't just want to share with you the mistakes that you may or may not be making, but also how to fix it. Okay, because there's really no point in just pointing out the mistakes and not giving you a solution for it. So not to worry, I'll go through that towards after I cover the other mistakes. Okay, so you must understand that trading is dynamic. Okay, meaning that the market moves, right? It's new levels are being created. Okay, current levels are also being violated. Okay, meaning that the environment is always changing. Therefore, you have to adapt. Okay, sometimes you need to shift your levels, right? Your support and resistance level higher. You need to manage your trades. You need to manage your trade setups. Okay, so you have to adapt, because you're trying to catch a moving target. Okay, the market is always moving. Right, if you trade the forex market, it's open 5 days a week, 24 hours, so it's always moving. So you need to be adaptive in your approach when it comes to trading the market. Okay, so hopefully you're not making this mistake, but if you do, right, just change your mindset, right, change your perspective about how to approach the market, that there's only one level that you want to buy off. Okay, just change that mindset and make that tweak. Okay, mistake number two, what I call the FOMO trade. Now, what is the FOMO trade? The FOMO trade means that it's the fear of missing out trade. Okay, that stands for FOMO, FOMO, right? Fear of missing out trade. Right? It's basically the trade where you are chasing the market because you do not want to miss out on the trade. Okay, I'm sure you know what I'm talking about, right? You see that price has went in the direction that you predicted, except that you're not in the trade for some reason. Maybe you wasn't at the computer, maybe you placed a limit order, but the limit order wasn't filled. Okay, for whatever reason, you are not in the trade, but you want to be in the trade. So what happens is that you just enter a market order, you just buy at the prevailing price, which is it's probably already a very bad price. You're either paying too much or you are selling too low. Okay, so this is called the FOMO trade. So let me show you an example of this FOMO trade. Okay, so we are looking at Kiwi franc yet again. Okay, it's the same exact chart. Okay, just to keep things simple. So assuming that, you know, this gray color rectangular was your intended buy zone. Okay, it's just a very textbook example. You have a breakout, right, and you're just looking for a breakout and retest. Okay, except that the market doesn't actually go back down. So you see this, you know, this engulfing candle over here, and you feel a bit, you don't like it because you know should have been a trade. So what do, right? You get into your FOMO trade and you just enter right here, right somewhere around here. Okay, so this is the mistake that a lot of traders make. Okay, because the trade didn't pull back to your level and you end up chasing the market. So what happens when you do a FOMO trade? Okay, let's talk about why it's really such a bad idea to do a FOMO trade. Okay, so this is the same chart, okay, except that this chart over here, what we have is we have the two rectangulars, okay? The shorter rectangular represents the trade that you would have taken if, you know, the trade was triggered, okay? The top of the rectangular would have been your entry, and the bottom of the rectangular would have been your intended stop loss. Okay, but because you missed this trade and you know you took this FOMO trade, you entered on the other rectangular, the taller rectangular, okay, with the top of the rectangular being your entry and the bottom of the rectangular being the stop loss. Okay, so you can see that you are paying such a higher price for it. So what happens when you do that? Okay, I have a explanation here for you. Okay, when you're doing the FOMO trade, which is the one on the right, okay, you're going to need a larger stop loss, right? Because you are chasing the trade, and you still need to have a stop loss. And if you put the stop loss at your original intended position, you're going to have a larger stop loss. Okay, and you're also going to have a smaller reward because if you are targeting the same take profit level, right, the market has already moved. So that means that your potential reward is smaller. Okay, and because you have this large position size, because you have a large stop loss, then the only way for you to trade this is to take a smaller position size, right? This is a concept that I teach a lot in this channel, adaptive position sizing, whereby you size your position in accordance to your stop loss, right? So that makes sure that you risk the same amount of dollar per trade. So let's say if you're going to risk $100 per trade, you put in $100 and you calculate your stop loss and you use a lot size calculator to calculate what is the right position size. Okay, but the outcome is the same, right? If you have a larger stop loss, then your position size is going to be smaller. Okay, you can see over here. And if you have a smaller stop loss, you're going to be able to buy a bigger position size. Okay, so what happens when you do this FOMO trade? You have a smaller reward to risk. Okay, that means that you are risking more money to make less money. So you think of it this way. You know, like you go to grocery shopping, you like to buy your orange juice at like a discount, 20% discount, for example. So when you see that, you know, your grocery shopping, there's a discount on a product you want to buy, there's a 20% discount, you want to buy it. Okay. But when you do this FOMO trade, what you're doing is essentially you are going to supermarket and you're telling the cashier, oh, this orange juice is selling at $10 now, but for some reason or not, I do not want to pay $10 for it. I want to pay you more for it. I want to pay you $14 for it. Okay, so it just doesn't make sense, right? So you want to avoid doing this FOMO trade. Okay, if you had stick to your original plan. Okay, and if this plan had played out, then you would have a smaller stop loss because you get in at a better position, right? And because you have a smaller stop loss, right, you can have a bigger position size, right? Because as I explained earlier on, when you calculate your position size according to how much money you want to risk, right, the smaller the stop loss, the bigger the position size. Okay, and one more thing to note is also that because you're entering in at a lower level, right, let's look at this chart. Let's say you're entering at this level instead, your profit target, the distance to the profit target is also wider, right? Wider, that means that you could potentially have a bigger reward. Okay, and this translates to higher reward to risk ratio. Okay, in essence, you are risking less money to make more money. Okay, so I think in these two, scenarios, we compared it side by side. It's very clear, which scenario you want to be in, right? You want to be in the first one because this is the same trade idea, right? You just take note that this is the same trade idea, but because of your execution, right? If you execute it well versus you don't execute it well, this is the repercussions of your decision. Okay, so always make sure that you have a plan, right? You stick to the plan and you do not do this FOMO trade. Okay, I've seen a lot of traders do this, and I think it's blowing out a lot of people's account because they mismanage the trade, right? You can have a winning position, but because you mismanage this, you do the FOMO trade, your reward to risk is small and you cannot compensate for the losses you incurred, right? Because every time you are making money, you're not making a lot of money, but every time you're losing more money. So that's a bad value proposition. That's very hard to be profitable as a trader. Okay, so you want to avoid this. Okay, so earlier on we talked about the first the first mistake being that most beginner traders only identify one support and resistance level, and the second being that they do the FOMO trade. Okay, so you might ask, what is the solution, right? Because as I said earlier on, there is no point in telling you all these issues, all the mistakes that you are potentially making and not giving you a solution. Okay, our channel, we try to give you a solution to the problem that you are facing. Okay, so if you are new, this is the first video you're watching, make sure you hit the subscribe button, make sure you turn on the notification bell icon. Okay, because we always give you solutions to the problems that you are facing. Okay, so what is the solution? Okay, the solution is actually very simple. Okay, it's simple to do. It's something that you can do today, but it's going to take discipline. Okay, I cannot force you to be disciplined because it's your trading account, it's your trading. I'm just a guide. I'm just sharing with you my experiences. There's no way I can force you to be disciplined to enforce this solution. Okay, but the solution involves having multiple levels to watch. Okay, as I said, the market is a moving target, so you need to have multiple levels to watch. Okay, there are multiple levels which the market may reverse at. Okay, not just a single level. So you need to start seeing the market as different levels which the market can potentially reverse off, not a single level. Okay, then the next thing you want to do is you want to wait for the price to come to the level, and then you use a trigger, right? You don't just enter, because right now you have multiple levels. Okay, you have multiple levels. So the question is, how do you know which level is going to hold, right? Which level is sort of the right level, right? So to speak. So what you do is that you need to wait for a trigger. Okay, so how do you find a trigger? Okay, that's not the scope of this video. Okay, but in our 3-day trading guide, there is a strategy that teaches you how to find this trigger. So if you are new, you have not read our book, you have not downloaded our 3-day trading guide, you can see over here. Okay, we have a 3-day trading guide just for you. Okay, the link is in the description. Just head down and download it. Okay, just put in your email and the book PDF will be sent directly to your email. So just check that out. Okay, but ideally you want to wait for a price to show you some form of confirmation or some form of trigger of a level before you take the trade. Okay, so that's how you do it. Okay, so just to recap, okay, in this video, I share with you 2 mistakes that a lot of new beginner traders make. Okay, number one being that they only identify a singular support and resistance level. Okay, and that's not the way to do it, because a market can reverse off multiple levels. Okay, mistake number 2 is because they miss the trade, right? Because they only identify a singular support and resistance level, right? And they want to be in a trade. They look at the market moving, they get excited, so they click on the button and they do the FOMO trade, which has very bad reward to risk, right? You are basically risking more to make less. Okay, and I also talk about the solution, which is you want to watch multiple levels, you want to wait patiently for price to come to this level, then you look for a trigger for your entry. Okay, so that's it for today's video. Make sure you hit the subscribe button. Make sure you give us a thumbs up if you enjoyed this video. If you have any questions, just leave a comment down below. If not, we'll see you in the next video.